YouTube. I'm driving to the JOB, and the JOB today consists of golf. Yoo-hoo! So that's one of the benefits of my JOB, which is in real estate. You get to kind of come and go as you please, and we're having, we're going to do some golf, do some business on the golf course. So talk a little bit about my job, about getting a mortgage. So there's a lot of different mortgages out there, and credit scores are actually loosening up right now. So the credit is, the money's flowing, so to say, a little bit looser than it was. I've heard rumors of lenders giving loans on FHA loan with a credit score as low as 580. So basically, though, in this market, we're really looking at a 640 credit score. Though I have heard of, the 580s, the 620s coming back into play. So what is needed to get a mortgage? Well, it's really not that hard as some people think. So let's say you have bad credit and you're trying to get an FHA loan, which there's a lot of different programs I work with. I'm not a licensed loan officer. I'm just giving you my expertise, based on my almost 20 years in the business, on and off in the last 20 years. So let's say you have some credit issues. The real interesting thing about FHA, you may not have to pay off all your collections if you have collections. The main thing is it's credit score driven. So the main thing these lenders are looking for is a 640 score. Now let's say you have a 620 score and like 5 medical collections. What do you do to get your score up there to 640? Let's say that's what your lender wants. The best thing to do is look at your existing credit balances. So let's say you have a couple credit cards. Let's say that you have a $300 limit on a Sears card or JCPenney card, and your balance on that is $250. Well, the goal is to get that balance down as low as possible. You don't want to pay it off and close it, but you want to get that balance down. The actual ideal amount right now that actually boosts up the credit score like a rocket ship is a $10 balance on any credit card. The old rule of thumb a few years ago was keep it at 30% or under. But we've got a software that runs different scenarios, and every time you plug in $10 on a credit card, that'll boost your score up immensely. Now, let's say, so that's the first step, is to get those balances down on those credit cards. And then a lot of lenders can pay for what's called a rapid rescore, where once you have a statement that you have indeed paid those balances down, they will submit the information to the credit bureaus online. They do have to pay a fee for that, but a lot of lenders that I work with will do that on behalf of the borrower, just so that they can get the loan. So you don't have to wait 60, 90 days for it to update in the system. That was kind of the old way. Now let's say you've got some collections and you've got your score's kind of low, and the 580, 620 range, and you've got some credit cards, but you don't have any balances on them. As a matter of fact, you haven't used them in a long time. Well, what you want to do is you want to start using those. Go charge your $10, wait for the statement to come, pay it off, let your lender know, hey, I paid this off, I got $10 balance I just paid off, and then go charge it again. You want to show activity, because if those cards are dormant, they're not really doing you any good helping to build your credit score. The other thing is, you don't want to close down any credit. This is kind of counterintuitive. People think, well, my credit score is bad, I better pay these collections off, I better close this account off. Actually, when you pay off a collection right now, what happens is it'll actually drop your score, because then it re-reports to the credit bureau. So in the long run, it's good, but in the short term, not so good if you're trying to get a mortgage quick. And let's say you're like, man, my credit, I don't have any credit. I've never used credit. I've never bought anything on credit. You can actually get credit cards that are guaranteed approval. They're called secured cards. Another term is, I just call them prepaid cards, because people seem to get that terminology better. But the secured part comes in, you basically have to pay the lender's money up front. Usually it's about $300 up front with the companies that we work with. So basically, you pay that money up front, $300, $250, whatever it is, and then you'll get this card in the mail about 4 to 6 weeks. So your credit limit is $300, but you don't want to, again, you don't want to go spend that $300. You just want to go charge $10. That's the key, charge 10, and that's what people always seem to struggle with. They get the card, they got 300 limit, they go charge 300. So that's not the way to use it. You go charge 10. And yes, I'm drinking the evil soda water. I haven't had any for a week. I'm trying to get myself off of it, but they had a special Speedway, 89 cents, so here I am. So anyways, charge 10, pay off the balance, go charge another 10. Get secured credit cards, and those cards have guaranteed approval with some companies. Not all companies. The companies I work with do. Again, I'm not licensed loan officer, so unless you're in the Midwest, and you're like, who can help me out or whatever, message me and tell me what state you're in. I'll let you know if I can help you out or not, or lead you the right way, because I don't want to be giving advice in a state that I'm not licensed or whatever. So I'm licensed in real estate, but not in mortgages. But basically, to be in real estate, there's different facets you can be in, but I typically work with the first-time home buyers, so I basically have to know everything about mortgages to get these people financed. Now, let's say, and basically after, if you're in that 580 to 620 range, after 2 or 3 months of charging $10 on a secured credit card, your score is going to pop. You're going to be good. And you don't have to pay off those collections with an FHA loan. That's what I'm talking about today, FHA, which is 3.5% down. The state I'm in actually has a 0% down option on FHA. That's a little more complicated, but I do work with that quite a bit too. So I won't go into that one because I don't know if your state does it or not. The last thing, let's say you have judgments. Unfortunately, judgments with an FHA loan, got to pay them off. Got to get that release of judgment, because that's a collection. Somebody's taking you to court on it. It's got to be paid in full, unless your plaintiff will settle with you on it, but usually they've taken you that far, they're going to want paid in full. So that's a little education on FHA loans and how to boost up your credit score. Wish you guys luck. If you have any questions, feel free to message me. Please subscribe to my channel, and please like my videos. The more subscribers, the more it helps out the cause. And over and out from the mighty, mighty Midwest.